Hello, everyone, and welcome to the October edition of iFlip's Mailbag. I am your host, Aaron Yoon, joined by none other than Lee Gearhart. Now, today is a little bit different. Normally, we like to do this live, but obviously, this is just a recording. Part of the reason, it's mostly my fault. I am not in my usual studio setup, and my laptop here isn't capable of doing all of the streaming stuff at once. It will struggle, and we thought this was the safer way to go. So hopefully you'll forgive us. We apologize for the inconvenience. Hopefully you'll forgive that it is a little bit later of a posting and it's not live. But we do have a bunch of really good questions we want to get to. Thank you to everybody who submitted them. So let's dive right in and get to our first question. Are you ready, Lee?
I am. Let's do it.
Let's do it. All right. So our first question comes from Robert Richards, and he asks, you have talked about picking stocks. I have not heard how iFlip is going to make it easier for us to do.
So let's just, I'm going to share the screen. Let's just
go ahead, take over
the screen. Go into the platform. You see the screen all right?
Yep.
While we're getting the technical kinks out. So I'm on our start trading tab. So there's a couple different ways you can pick stocks. I mean, directly and indirectly, quite frankly, on the platform. So let's just go down the three options. So option one is that you can manually buy it just like you can, anywhere else. Let's just say, let's use Apple, for instance. I want to go buy Apple. So all I got to do, right up here where it says search stocks, I'm just going to type in Apple. And yes, I know how to spell Apple, but I just use the ticker. So I would click on it, and it's going to give me the daily chart here. If I want to get into it any more in depth, I can go to Trading View, look at some charts and stuff like that. Kind of a cool thing about this feature, though, even when you're manually buying something, is that we'll let you know if the AI has this invested in that particular stock or not right now. So as this says right here, that iFlip AI has this stock out of the market, meaning if you have money allocated towards Apple, we're actually sitting in cash right now. But if I want to say, heck with that, I still want to buy it, I think it's a good time to buy, all I have to do right here is enter the amount of shares that I want to buy of Apple. And we do have limit buys and sells as well, and we're not really covering that today. But this is option one. Option two would be on that start trading tab as well. You see the AI smart folios here. So, and I'm actually going to toggle between the two, smart folios and manual. So if I go to manual, you'll notice that all of these have a white background. Oh, Apple is actually already there. I didn't even need to search for it. So sometimes the stock you're looking for might be on the popular stocks section right here. But let's go back. So you notice on the smart folios, it's all that navy blue background. So anything with the navy blue background, you're also, there's many ways to see this, but you'll know that the AI can manage this for you if it has a navy blue background. So I happen to know that the SPY Plus has Apple into it. So I'm going to click on it here. I'm going to go all the way to the bottom. And notice that the SPY Plus portfolio has the S&P 500 ETF as well as Apple. So option two would be to find a portfolio, or a smart folio rather, that has that stock that I want in it, and just go and invest money into it up here right there. And then lastly, to play pessimist here, say you don't like the SPY Plus portfolio for some reason and you want to still have the AI manage it, you don't want to do it yourself, what you can do is click this custom button right here. And I picked a good one. Apple is right there. So I just have to click Apple. That's under the popular stocks right here. And just to let you guys know, we have roughly 500 to 600 different stocks that you can have the AI manage for you. So we have about 25 or so right here in the popular stocks to choose from. But again, same thing, you can go to the search right here and pick a stock that you want. And just to further explain this while we're here, if I wanted to customize a whole portfolio and not only have Apple in it, I could just, click and continue to add stocks just like this. I can set the allocations to be whatever I want, save it, and then the AI will manage all that for me. So those are the three ways, just to break it down. I know it's a bit long-winded. Either one, you can manually buy it on your own, enter the amount of shares that you want. Two, You can pick a smartfolio that might have all the stocks that you want in it already. I would consider that like a pre-built smartfolio. Then option 3 would be to customize your own, like you're seeing here on the screen. You can set up all the allocations, pick all the stocks that you want, and the AI will still manage it. Aaron, did I miss anything?
To answer the question, how does it actually help you pick stocks? Well, you'll get like a little bit of a notification whether the AI wants to be invested or not. And if you don't even want to deal with being notified, you just want the AI to fully manage it for you, switch to smartfolio mode. You'll know if you're blue, if you're in the blue version of the app. So that's hopefully that answers your question. And that's how the iFlip AI actually helps you pick stocks. But the question is for all of you, are you currently using the iFlip AI? Do you like the new feature that we rolled out where it tells you whether or not the AI is in or not? Or do you prefer smartfolios? Whichever way you like to roll, let us know in the comments section below and leave your thoughts there. Now let's move on to the next question. Let me get my screen share back. Okay, so now that my screen is shared again, let's move on to the next question, which comes from Robin McCann. This question came right after we did a webinar, and I believe the webinar was full of futures traders. So this is a little bit more in depth, Lee. I hope you're ready. So does the AI only enter long and exit in bull markets and stays out of the markets altogether during bear markets? And there's multiple parts to this. In other words, does the AI doesn't enter and exit in both bull and bear markets? I believe they said in the webinar tonight that the AI exited the market in December 2021 and has remained out of the markets. Or did I not hear that correctly? So it's a multiple part question, Lee.
Yeah, I'll take a stab.
Yeah.
I'll be brief with it. So philosophically, we're either long or we're in cash. So when the AI is sensing that it's not a good time to be owning that particular stock or that ETF or the market for that matter, just like we saw with question 1 when we talked about Apple, when that said the AI had us out of the market in Apple. So you're either long or you're in cash, quite frankly. We don't short, at least currently we don't short. So really what we're trying to do is capture the bull markets and then really let the bear markets bypass. And the AI plays, sometimes we get it really close to the bottom and the top, buying pretty close to the bottom, selling it towards the top. But we really, I would say on average, we're playing between the middle, 80 to 90% or so. And to an extent, the AI makes the market prove itself a little bit.
Well, I know where Robin is coming from because I am also a futures trader. So I can understand the instinct to want to make money in both directions of the market, bull market, bear market, sideways market, ranging. I don't care. I want to be making money. That is kind of the most common mindset of a day trader. I will also say it is somewhat of a dangerous mindset because it really makes you prone to over trading. So I'm going to take this screen down and I'm going to switch to my trading view chart here. So here I have the chart of the S&P 500 futures. This is the continuous contract. If you're a futures trader, you know what I just said. If you're not a futures trader, don't worry about it. All you need to know is that this is a chart of the S&P 500 index, which is kind of the bread and butter for most performance analysis and comparison, right? So Robin, you absolutely heard us correctly on that webinar we did for your group. The iFlip AI had our iFlip customers exit December 28th, which is right here. And obviously you can see that each candle here, each bar represents 1 day. We are steadily heading downwards, right? It has not been a pretty year this year, right? Let me just do a real quick price check here and give you some numbers. So from December 28th to basically right now, we lost 25%. So if you're like one of those traditional investors that follow the mainstream media, that believe in the you can't time your market myth, You can't time the market. You just got to be all in all the time. Eventually, the market will go back up. Well, right now, you're sitting at, let's say you started the year or you finished the year last year with like 10 grand. Right now, you're sitting at $7,500. You lost $2,500. Now that's you could have avoided that if you had used iFlip's AI. Now, I will be perfectly honest. iFlip's AI, it isn't at zero this year. It did attempt to buy some of these dips. Okay, the iFlip AI isn't some kind of fortune-telling machine. It is a pure risk management machine. Now, I don't remember exactly what dates because it was very, very short. It tried to buy, let's say it tried to buy this dip, right? But it couldn't make a new high, it made a new low. They were like, okay, you know what? I'm going to cut that trade. I missed. I lost a little bit. It tried to buy, some of these dips, and it just couldn't hold on to a long-term profit. So I will be honest, our AI trading the S&P 500 is negative this year, but it's not negative nearly as much as negative 25. Okay, it's lost much, much less than that. Now, over time, this is how we win. We've talked about how losing is much stronger than winning. So, missing the 10 best days of the market is totally worth also missing the 10 worst days of the market, because the 10 worst days of the market is way stronger than the 10 best days of the market, right? Most financial advisors will say something like, oh, you got to stay in the market all the time. You can't time it because you don't want to miss out on the 10 best days of the market, do you? And the real answer, the professional investor mindset answer is, yes, I absolutely do want to miss out on the 10 best days of the market if I can also miss out on the 10 worst days of the market. That will far outperform the buy and hold mindset. So, Robin, I hope that answers your question. I am totally, let me switch back to the question here. Yes, you absolutely did hear us correctly. It has not remained out of the market, though. It does attempt to buy dips. It just does it without any kind of emotion. Now, I have some comments on the second piece of the question as well. All right, so now my chart can go as far as this right here is the COVID crash. Boom, that nasty crash down. And then all the stimulus package, the 6 trillion plus the other 6 trillion, like $13 trillion injected into the economy within a span of a year and a half or so, boosted it back up. Okay. And then now we're in this little downtrend for 2022. Okay. Now we're looking at a 2-year, 3-year span. Now, why did I bring this up? Because the question was, the way that I interpreted it, why doesn't the iFlip AI short? And there's a very simple reason. There's many reasons for that, actually. We work with a lot of retirement accounts, and a lot of retirement brokers doesn't allow shorting because they're qualified accounts, but whatever. Okay. However, strategically, from a technical analysis point of view, looking at the chart, if you look at this, the uptrend is nice and smooth. The range is very, very tight. Okay, it's a nice smooth ride up. Okay, but anytime it goes down, it's very violent. So let's look at the COVID crash a little bit. Okay. Again, each bar is a day. Okay, so just look at this is over a span of 3 or 4 weeks. Look at how much movement up and down there is. Look at how big the bars are. There's so much movement throughout the day. It's very, very volatile. And that's not really a good fit for AI trading, for AI investing. AI investing is when there is a measurable variance in the movement of the market within a statistically acceptable range. When a market goes down, it usually goes down very violently. When it goes up, it usually goes up very, very gradually. So the uptrends are more of a better fit for AI, just in general. So that was the nasty COVID crash. Let's look at the crash that we're dealing with right now. So I'll go from Tuesday, not Tuesday. Go from December end of December to January. So look, we had a little bit of a downtrend. If I do this right here, is this the start of an uptrend again? I don't know. I mean, hindsight being 2020, we can tell that it's not. But how about this? It made a new high. Is that the start of an uptrend? Well, obviously history shows that it's not. So when the markets move down, they move down with way more range and they move down way more violently. So our AI says, you know what? That's too risky. I'm just going to stick with the long markets, or I'm just going to stick with going long during the bull market. It's a much easier game to play. So I hope that answers your question about why the iFlip does not short. Let me switch back here. The question is for you guys, though. Do you like to be in investments where you can short, or do you like to play it safe and just play long? Let us know in the comments section below how you feel about this strategy. Okay, let's move on to the next question. Our next question comes from Jay Donnelly, and a very simple question, but I think one that has a lot of, we can talk about this forever because it has a lot of layers to it. What kinds of returns do traders usually aim for? Lee, I don't know if you trade yourself but I know you definitely know some traders. What do your buddies usually say when it comes to something like that?
Well, I think you set it up perfectly in that, I mean, I guess I could consider myself a trader. I've put in some trades before. It doesn't mean that I'm like my friends who might, make 5 trades a week, 10 trades a week, 20 trades a month, whatever it might be. So the word trader can be taken, I mean, we kind of talked about this on the first episode as well, and I'm not trying to knock the questions by any means. They've all been great questions so far. It's just that they can be interpreted in so many different ways that it's like, well, here's my opinion. I mean, and like you said, you could talk about this till the sun comes back up, but to keep it more brief, I mean, I would imagine people are trying to aim for as much as they can, right? I mean, you're trying to, no one goes into any trade or into any investment for that matter thinking like, heck yeah, I'm going to lose some money here. That's unless I've never met that person, I guess, if there are people that are doing that. But I mean, there's obviously different philosophies on things. There's different asset classes that you can trade. Things are going to be different between all of that. I think the one thing from my knowledge that they all have in common, though, is typically, back to what we talked about again in the first episode of having a plan and things like that with retirement accounts. You have to have some sort of plan or some sort of, it doesn't necessarily have to be an algorithm or AI or anything that we have. It has to, you're expecting something to come out of your buying, meaning you're buying this particular stock option, whatever it is, for a specific reason. You have an opinion and you have emotions as to what it's going to do. Hopefully it goes as planned. Oftentimes it does not. And you also have to figure out, how you're going to mitigate risk and, limit your losses and things like that. But, if you're, say your win rate is 50% and the winners, I guess, are doing a lot better than your losers, then you're probably being pretty successful. And I would also say that the market somewhat dictates what types of returns you can achieve, if you will, as well. Things like 2020, people were making money left and right. It was like they didn't even have to know anything, whereas it's probably a lot harder this year. And personally, just from the things I've done, I mean, I've made some good trades, but typically I buy something because I see that there's value in it, somewhat like our AI does. I'm in one right now that I thought was a good time to buy, and it absolutely has not been. So I'm stuck with holding it for, I don't know how long. It's going to be a while, and hopefully things come back. I mean, you never really know. So again, I think it can be taken in so many different ways, and it probably depends on the type of person. I don't think it can be like necessarily like, hey, I'm trying to make 5% every week. It very well might be for some people, but other people, they might just be trying to make money, because we all know that a lot of traders actually do not make money. So that's kind of the first step. And then you start to quantify that and set goals for yourself and figure out what works into your strategy and what risk you're comfortable with. What do you think, Aaron? I mean, obviously you're more of a hands-on type trader than I am, but that's kind of my viewpoint from the outside looking in.
Yeah, and I won't profess to be any kind of like a very good trader either. I'm still learning. I still consider myself, even though I've been at it for a couple of years, it's been a part-time kind of side hustle for me. I love the game because I think it's a very that's how I treat it, is a game. And so from that perspective, this question is a little bit difficult for me to answer, because it's like, most traders can't beat the market. That's statistically. Most traders can't outperform a buy and hold performance, which is long-term, like depending on who you ask and depending on what decade you focus on, it's like 7, 8, 9% average per year. Most traders can't perform like that, no matter how much they brag about the win they had last week. Long-term performance, they don't actually outperform that. So the professional traders that I know that do make a consistent profit, that do trade for others, they trade other people's money, right? They have licenses, then they're professionals at this. It ranges, because it also depends on what leverage they're using and what market they're trading. So I'm most familiar with like the futures and Forex market. And in that market, most futures and most professional futures and Forex traders I know would frame it like, well, I want to be able to double my account in a year. That's a good year for me. If I don't, then okay, a 20-30% year is good year, is still a good year for me. But my target, like I'm excited, I feel good about myself if I can double it, right? It's like shoot for the moon, and even if you miss, you'll still land among the stars. It's that kind of mentality. Okay. If you're looking at it from a month, some people don't frame it that way, right? Because that's more of a longer term swing trading mentality. Maybe if you're more of a day trader mentality and you're seeing your P&L go up and down every day, right? Because you're out of positions every day, then day traders that I know are going to think more like, okay, I want to average like 5 to 10% a month. Or if I have a 20% month, like I'm really happy. If I have a 10% month, I'm satisfied. Obviously, I could have a negative month too, and I'm not really going to sweat it, right? And that's the big thing is professional traders, they don't really get emotional about having a down month or anything, because they know they can perform very similar to our AI in that they're going to be, it's like they have ice in their veins, man. They just they know how to manage their account like a human AI almost. Like I've seen them in action. I'm like, oh man, I wish I had that level of discipline. I'm still working on it, right? I'm at a point where I know that the system that I trade has an edge, and it should be able to give me that either one of those returns that I told you about, 5 to 10% per month, or if you extrapolate that, that's like equivalent to like doubling your money within a year. Even though I know the system, doesn't mean I can trade the system very well. Okay, I am not anywhere near there. I'm very, very up and down because I am not as good at that as at executing it yet. Okay, so I think there's like I said, there's multiple layers to this. But just to give some numbers to recap, double the money in a year, so 100% in a year, which is kind of crazy, but it's not that far-fetched if you're trading with leverage, or 5 to 10% a month, 20% a month. I've done 20% a month before, but I'm not a profitable trader. You see what I'm saying? Like I could talk, right? Do you know guys like that, Lee? We're like, oh, I did, you know what I mean?
It's like, I'm not saying trading is gambling. Some people would say so. I'm not going to give my opinion on that, but it's like, when you go to the casino, oh, I doubled my money tonight. Well, we also didn't tell me about the last week before where you lost all the money that you brought 5 times in a row. So
yeah.
And I think just with everything nowadays, you somewhat get an inaccurate representation of maybe not people, but just the things that are happening in life. You see all these successful traders and you're like, man, it must be easy. I can do that too. And I'm not saying that they're not showing their losses, because a lot of them are very transparent, but at the same time, professional baseball players make it look extremely easy to hit a fastball, yet a lot of them are getting out 70+% of the time as well. So it can sometimes be a game of failures, but at the same time, if your failures are a lot smaller than your wins, then you can be on a pretty good track.
Yeah, absolutely. I like that analogy. I use a lot of sports analogies because I feel like the game of trading is very competitive, like a sport. And in sports, why do we think LeBron James is so great, right? He's been so good for so long, so consistently. And that's the kind of, skill you want to have as a trader. Consistency is key, right? I'm sure LeBron James does do some crazy stuff, but the craziest stuff might be someone throwing like a full court Hail Mary buzzer beater and it goes in, right? And that might make the news one day, but we certainly don't think of that, the person who threw that ball. We think of it kind of as a lucky shot, and it's not something he can do every single game. So trading is not just about one win or like a massive win, because I could sit here and brag about my 20% month all day long, but it doesn't change the reality that over a long period of time, I'm still closer to like a break even kind of situation than being profitable. And that's just me being honest. There's not that much honesty amongst traders. That is the thing. I don't know if you noticed that. Hopefully that clarifies things, and just watch the greed is all I can say. But the question is for all of you: what kind of trading returns would you be satisfied with? Would you be satisfied with 5-10% a month, or do you need way more than that, or are you okay with even less than that? Hopefully you're keeping your risk management in check there, regardless of what you answered. Okay, whatever your thoughts are, jump down to the comment section below and leave your thoughts there.
And even to add to that, what markets are you trading? I'm curious, what people trade, what they're looking for. Give us some correlation if you can.
Absolutely. Whatever markets you're trading as well, jump down in the comments section and leave your thoughts there. And let's move on to our last question of the night, which is coming from Eddie Perez. Okay, Eddie asks, is it better to pull out of the AI portfolios, as Kelly is predicting now is not the time to be in equities, and relaunch into them when the conditions improve? Or is the algo sufficient to stay in the portfolios to limit any downside? I believe this question came to us after the last AI circle, where Kelly was very bearish on his stance on the equities. Just to give a little bit of context, what do you think? What do you have to say to Eddie?
Actually, I noticed it. This one was sent in this morning, I believe. I saw it pop up to the mailbag. So Eddie made it just in time, and I'm glad that you asked the question. As Aaron said, we like not only all the questions, but especially the thought-provoking ones. And honestly, I even have to try to understand what the question is half the time as well. Again, this is another one. I'm going to project my opinion as to what it's being asked, and Aaron, you might take the question in a different way. But how I'm understanding this is, I think it's self-explanatory what Kelly said. It's probably not a great time to be in equities right now. I'm taking this as, is Eddie asking, is it better to take my money out of the smartfolios I'm using right now and wait until a later date? Maybe it's a week from now, maybe it's a month from now, maybe it's next year, who knows, whenever the AI gets us back in, and just reinvest the money then. So I mean, in that scenario, while I can somewhat understand it, I'll maybe take it a different way. And that a question I get all the time is, hey, the market's down so much right now. They're either like, one, is this a good time to get in? Or two, should I wait until the market comes back a little bit to put my money in for the first time? So still somewhat similar to what I think the question that's being asked. And I could be wrong, and I apologize if I'm misinterpreting the question. But the answer to all those, in my opinion, is that I always like to see the money allocated towards the portfolio, regardless of what the market's doing, regardless of what our opinion of the market moving forward is. Not to say that you're gonna, typically in the things that we trade, you're not going to see, huge volatility in that, if the AI gets us in today, that tomorrow, you're getting in and you're losing out on 10% or anything like that. There's typically not that many drastic changes. So it's not like you're leaving a ton on the table. However, I still like to be able to have the AI determine when it's the right time to get my money into the market versus me projecting my opinion as to, should I allocate this money now? Should I not? I'd rather have it sitting on the sidelines waiting for the time to get in rather than trying to make up for lost time, if you will, and be reactive, I guess, towards whatever's going on in the market.
I understand the temptation and the urge to manually mess with anything. Because as humans, we want to feel like we're in control. And especially if we're watching something go down, right? If we're watching something negative happen to our money, we want to do something about it. Even if we don't know what the best move is, we still want to do something about it because we want to feel in control. And unfortunately, that usually doesn't end well. So what I say to people like that, or who have that temptation, just to give a little bit of perspective, is yes, you could pull your money out preemptively and you might save yourself from some losses. However, that doesn't mean anything if you don't time the reentry correctly as well. Because so what if you get out early? If you get in too late, it could easily be the same thing as just, well, you just might as well have bought and held. So what you're setting up for yourself here, Eddie, is if you want to manually override something, you're more than welcome to. We give you the freedom to do that at iFlip. But sometimes it's a little bit of a double-edged sword, because what you're signing up to do, understand the decision that you're making. You're signing up to be making two decisions. Time the exit better than the AI, and time the entry better than the AI as well. So you got to be right twice, not once, when you do something like this. Now, that's why, or you could make zero decisions and just let the AI do everything. Okay, the exit, the entry, everything in between. Just let the AI do everything. And the people who have done that, because they literally have no interest in developing the skill of market timing and trading under their belt, they don't care about it at all. They're like, here, just take my retirement money. I'm not interested in this. I want to do my own thing somewhere else. Stock market stuff, I trust the AI. Those customers usually have by far the best returns, right? Lee, you probably know this even better than I do, because you're more, you have more visibility towards that. You want to comment on that at all?
Yeah, I mean, it sounds weird to say, but really you're hiring the math to do what's in your best interest, quite frankly. And the more that you play with it, the more that you're diluting its value, I guess, to you, if that makes any sense. You're hiring something to take your opinion and emotion out of the decisions, yet you're also trying to decide when it's the right time to get out, when it's the right time to get in. So to me, it's either choose option A or choose option B. And not to say that you can't pull money out when you need to. Again, like Aaron said, you have full authority to do so. But I think people get in the most trouble when they do try to beat the AI because they think they can do a better job than it. Gladly try. I'm just cautioning you that it might not work out as well as you might anticipate.
It's not about any one trade, right? We want to get away from that kind of mindset. It's about what happens over the long term. So if you're tempted to mess with it, I mean, we can't stop you. We're not advisors. We're not going to tell you what to do around here. We're never going to tell you what to do. But we are going to say what usually happens to people who have done that. That's about as far as we're allowed to say. That's about as far as we're allowed to go with information sharing. Lee, any final thoughts?
No, I hope that our responses on any of the questions, aren't taken as like you shouldn't do this, or you should do this, or that by explaining something that we think that your point of view is dumb or anything like that. It's absolutely not. It's just, again, it's our opinions, and it's kind of our spot to be able to say it and take it for what it's worth. Feel free to disagree. If you want to take your money out and put it back in before the AI does, then feel free to do so. If you want to pick your own stocks and try to beat the AI, feel free to do so. We just know that we've seen it for 5 or so years now, that typically the AI is better than almost all humans. So
have you seen anyone, I'm curious, Lee, have you seen any of our customers that can outtime our AI?
I've seen a few people be pretty successful. I could think of like a year like this year where, even again, our intention is to be able to outperform what the S&P is giving you while taking less risk in doing so. And obviously the market's down, last I checked, it was 22%. By the time you watch this video, it might be more or less than that. But, if I were to tell you in October of this year, like if I would have told you this at the start of the year, hey, I'll break even for you. I'll make your whatever you have right now. If you have 10 grand, it's going to be worth 10 grand at the end of the year. You'd probably never take that back then, but now you probably would. But I only bring this up because there have been some people that have bought a lot of dividends and done really well with that, at least from what I can perceive. So I mean, there's difference in strategy and things like that. But those people are also, exposed to, no, I wouldn't say dividends are extremely risky, but they are taking on some risk that our AI is not, because our AI is in cash and a lot of different things.
Right. And if you hold that strategy throughout, well, you're probably going to fall short of the massive bull market that we had the past 12 years or so. The dividend strategy would have been nice, but definitely investing in like big tech over the past 12 years would have been way nicer. Right. So it's like, you have to be able to diversify. And this question isn't about diversification at all. But that's really where I would put the focus, right? Diversification, and not in the way that the mainstream media talks about it, where they're like, oh, invest in more stocks, or invest, but all in all the time. No, real diversification from a professional perspective is diversifying your strategies, diversifying what edge that you're trading with, what system that you're investing with at any given moment in time, which is what our AI does for you kind of automatically. It knows to pump the brakes or stop altogether, get the hell out of there in years like 2022. And it's worked out pretty good so far. It has no intention of, we talked about Apple earlier, and we talked about this on the AI circle. So I'll close with this. The AI doesn't want to look at buying Apple until it approaches 100. Okay, that means that it's still got a ways to go down before it even attempts to push the market back up. So we could easily look into the end of the year and still be out of the market, in which case, I mean, we could have been out of the market the entire year almost, and it wouldn't be the first time. The AI in 2008, iFlip wasn't in business in 2008, but Kelly's math and his statistical formulas do go back many decades, actually. And the math said no trade in 2008. Not at all. And if you look back in history, like, well, that would have been a pretty good move.
And only since you, oh, sorry, carry on.
No, that was it. Like to be 0% in 2008 instead of negative 37, which is something like that, what the S&P was, pretty good.
Yeah. And only since you brought up 2008, there was a question earlier when I was talking about going long or being in cash. And I'm not trying to say I'm a no risk type person. Shorting's way too risky, anything like that. But also at the same time, if I remember the data correctly, more people lost money, or people lost more money in 2009 trying to short the market than they did in 2008 just by being invested in it. So to Aaron's point about, it's a little bit more vicious on the downturns versus, how things come back and how the market progresses. I mean, that's absolutely true. And at the same time, historically, and not to say that this is going to carry on forever, but historically the market goes up 85% of the time. So we're okay with, bypassing the 15% of the time and not trying to be overly aggressive or overly ambitious and trying to capture every single day. Doesn't mean that's the right or wrong thing to do. Again, as Aaron said a few times about strategies, you have different strategies, people have different strategies. And if you're really good at capturing the whole 100%, great. But most humans are not. So I think most people are pretty happy with participating 85% of the time, staying in cash 15% of the time, whatever that ends up being in my lifetime. I'm not really sure, but I know for probably the foreseeable future will be pretty heavily in cash, and I'm okay with that.
Yeah, I mean, and it's not just retail traders as well. It's also on the professional level. Hedge funds that are focused on shorting stuff, like are shorting the markets, their lifespan is not very high. So many of them go down under. So before I joined iFlip, this is a little bit of a tangent, so I don't know if people are going to be interested in this or not, but before I joined iFlip, I worked at a hedge fund, private hedge fund, not one of those publicly traded ones. So I'm not going to name names, but it did manage 20 billion, which is pretty big for a private hedge fund. It was also 25 or 26 years old, which means it was established in 1995 or 1996, which means it survived the 2000 the .com bubble burst, right? The dot bomb, if you will, as it's commonly known. It also survived the financial crisis of 2007, 2008, and it's still around today. Okay, most hedge funds don't survive. I won't say most, but a large number of hedge funds who are like these cowboy rock star type of mentality hedge funds. They want to make killer returns for their clients. They don't make it past their first financial crisis, because either the financial crisis kills them, like it breaks them completely, or it makes them, right, because they were smart enough to have shorted it, but then they they're kind of addicted to shorting, and then they end up shorting during the 85% of the time that the market goes up, and then they put themselves into a slow death over time. That is a really common pattern, even amongst the best in the world, even amongst professional hedge funds. That happens. I mean, just look up all of the crypto hedge funds that started in 2021, and see how many of them are still alive today. Not too many of them. It's really kind of sad. So be careful. It is a bloodbath out there. If you have your money intact, whether you're trying to time it or not inside of iFlip, just the mere fact that you have the majority of your money managed by our AI is already protecting you against a lot of other dangerous behavior out there. So, but once again, you're in good hands. But within the realm of iFlip, there is some flexibility. So I'm curious, what are your thoughts? Once again, please go down into the comment section. Let us know, are you a manual overriding type of style investor, or are you a hands-free type of investor, and anything else in between? Let us know your thoughts in the comment section below. And as always, to wrap, if you have any questions of your own, please feel free to just send an email to mailbag@iflipinvest.com. We are still a small enough channel that we're able to answer every single question that we get. I am kind of bittersweet about that, because I'm glad that we get to address literally 100% of the questions that we get. A lot of them we show on the show. Some of them we just answer directly back, because they're simple enough that we don't have to spend an entire YouTube show on it. But hopefully we also grow bigger as well, and we can do this more often. So please like and subscribe if you enjoyed this video, and make sure to email mailbag@iflipinvest.com. So that'll wrap up today's episode of iFlip Mailbag. We'll see you on the next one, everybody. Good night.